Hello and welcome to Bloomberg Quint. You're watching, thank God it's Friday, and this week we are in conversation with Mr. Anil Ahuja. He is the CEO and rather Chief Investment Officer at IPEplus. Mr. Ahuja, thanks for joining us. Joining with us also on the show, of course, is Shraddha with me, who is also going to be, taking questions. But Shraddha, you want to go ahead and start?
Well, yes. First up, of course, it's the earnings season. So, Anil, just wanted to understand what you've made out of the earnings here. Any bright spots that you've seen?
I think this time's earnings season has been quite, I would say, in line with what was expected. So I don't think there has been much to write home about. But the good news is that there haven't been major slippages, other than the few extra NPA recognitions by the banks. But other than that, I don't think there has been any significant out-of-line behavior, which means that hopefully the downgrade cycle that we've been seeing for the last couple of quarters actually should stop. So I'm actually very pleased that at least the cycle of downgrades is coming to an end.
Anil, anything that gives you more confidence on PSU banks, or would you rather stick to the retail-oriented private banks even after seeing the first early numbers?
I have actually maintained that there is probably value in the PSU banks, and they have been hamstrung with the lack of capital in terms of being able to lend and to be able to participate in the overall growth of the retail financing business. Now, retail financing both at the auto and hard goods as well as housing finance. But I think with this new injection of 2,11,000 crores, I think there will be a respite from the capital constraint, and that should allow the PSU banks to participate and play the game a little more aggressively. So I think the field is going to get a little more even between the PSU banks and the private sector banks and NBFCs.
Mr. Ahuja, the consumption companies have seen a little bit of an uptick on volumes. Of course, it's largely on back of coming out of GST and implementation. But managements are suggesting and insisting that this trend is here to stay. If you consider that and the valuation picture for a lot of these consumer companies, how would you read this theme in the sector?
See, I think at this point in time, the opinion or the market is divided in two distinct camps. One camp is that the growth is here to stay and the trend is strong and everything is fine, which would struggle to justify the valuation. And then there is the other camp, which is the but camp. And, but if the growth doesn't come, and if we have a repeat of what we've been having for the last couple of years, then we have a serious problem on valuations, and the valuations are stretched. So your choice is between, it's fully valued, or they are really, really stretched. So that's where it is. There is, I don't think there's anybody in a camp which says that the valuations are cheap or reasonable. So, we're dealing with a market that is expensive. The question is it really expensive or is it just fully valued?
Anil, is there any sector that you are wary of right now and you would definitely keep away from?
That's a difficult question to answer. I would rather answer the sector which I'm more comfortable with. And you can then avoid the others. So I think the big play, in my view, is essentially coming from the consumer sector. We still haven't seen any signs of corporate sort of investment. So the consumer growth is definitely worth playing, which means that the NBFCs and the private sector banks will continue to deliver reasonably good numbers, which also means that with the new capital injection, the public sector banks should be able to participate in that game. You've got the entire auto pack and other white goods and stuff which will also benefit. And finally, I think the infrastructure and related sectors should also benefit with the amount of money that the government should be throwing into uh, into rebuilding or construction of India, as well as the construction of the housing sector, which is going on. So whether it is the big construction companies like Larsen, or it is players like cement, etc., which should benefit.
Mr. Ahuja, how about your view on the rate cycle now in India? Have we reached the end of the rate cutting cycle, and maybe there will be a lull period, so to speak, for some time now?
I think so. I think so. I think the rate cutting cycle will take a breather. I know there is a lot of noise and pressure and demand for rate cuts, but I don't think that rate cut can be justified on the basis of the numbers that we are seeing at this point in time. Add to that, if the public sector banks start to lend, and there is any minor pickup also on the corporate investment cycle, I think rate cuts are off the table for some time.
What we've also noticed is domestic liquidity, that is liquidity coming from domestic institutions, is here for now. What it's also doing is it's pushing markets upwards. At what point in time do you think that this liquidity ceases and people start seeing the real sense in value, if there is any at all right now? How are you reading this?
I don't think the liquidity that's coming into the market is even looking at the valuation. I don't think that liquidity is sophisticated enough to understand the valuation and the levels at which we are trading today. I think that liquidity is essentially being pushed by the aggressive messaging that is coming from the mutual fund industry, which is essentially take X% of your money and stick it into equities, and it doesn't matter at what price you go in because you're in it for the long term, which is all fine. And as long as the market keeps performing, that money will keep flowing. I think it will take a shock of maybe 10-15% or something pretty meaningful to cause that liquidity flow to change. Because so much of it is coming through SIPs that it is actually very difficult for that tap to be turned off easily. So you need a pretty major event or some kind of shock which will cause that liquidity flow to slow down.
And if you consider the way the government is going to perhaps conduct itself, how would you read and how do you expect the government to play its cards as in the race towards the elections in 2019 now?
See, the government, I think, has to play some kind of populist card in 2018 budget. They've taken a bunch of hard steps in the last 12 months, and I think what we expect to see next year will be more populist policies. So that's how I would see 2018 February-March budget.
Are you worried about the rising crude oil prices, which have now crossed $60? Because and do you see this rise as a sustained one? Because that could have implications as far as meeting fiscal targets are concerned for the Indian government.
Okay, I am actually not a believer in a sustained high or sustainable high crude price because I think there is so much capacity that can come on as soon as the levels get to level. Actually, at $60, a lot of the capacity in the US will start to come back on, which we're already seeing signs of. So I don't think that the oil price will remain elevated for very long, or I don't think it is going to go much higher than where it is right now. I'd expect it to be lower in 6 to 12 months.
How are you viewing this entire debate of cryptocurrency as being treated as an alternative currency?
We could have a 4-hour conversation on that subject. It's a subject that interests me, and I've spent a lot of time trying to understand it and learn about it. But it is a whole different paradigm. So if you sit in the current world paradigm, which is the paradigm of money and the paradigm of governments issuing money, it is very difficult to understand the cryptocurrency world. But if you're willing to make a shift to the other paradigm, which is an alternate paradigm entirely, where you think of the cryptocurrency as gold. Just I'm making it as simple as I can. If you think of Bitcoin as gold, today if you had gold in your pocket, you could walk across and trade it with anybody you wanted to. Nobody would ask you where it came from or where it was going to go. You could carry it from Mumbai to Dubai, or you could carry it to New York, and you would be able to exchange it for value. Uh, and no government has any record of it. I mean, realistically, no government has any record of it, and you don't have to explain yourself to anybody, and it's completely anonymous. So if you think, and why does gold have value? Gold has value only because you and I agree that it has a value. There is no stamp of the Reserve Bank on it saying I promise to pay the bearer of this coin. So if you accept that paradigm, which is an entirely different paradigm, the whole new paradigm starts to fall into place, and it makes a lot of sense. Will it get accepted? Will it get I don't know whether it will succeed or not, but it is a whole different ballgame. I think with Bitcoin being accepted as a commodity and starting to trade on the CBOE, I think that will make a big impact on the future of this stuff. So I don't think I would talk about it as a currency. I would talk of it more as a commodity. It's easier to understand if you compare it with.
Right, Mr. Ahuja, I do want to get a little more technical when it comes to the Bitcoin specifically. Over the past couple of months, or rather last few months, what we realize is that the Bitcoin has undergone this process called forking. And so far, forking in the Bitcoin really hasn't impacted the way, it's perceived as a cryptocurrency, or for that matter, commodity. But on November 16th, there is going to be another event by which, should we see the Bitcoin fork, this time it may result into two completely different blockchains. And again, I don't mean to sound very technical, but would you like to offer any comments in this case as to what it might lead to?
So let's say understand what is the single biggest issue with Bitcoin today. The single biggest issue with Bitcoin is its ability to scale in terms of number of transactions per second. So there are long waiting lists. There is a huge issue in terms of scalability because these are distributed ledgers, and the records have to be mirrored across all of them, and it's a huge consensus process, which means it gets very, very, very slow. I think theoretically you could probably do 7 transactions per second across the whole world, which makes it a very inefficient product for actually transacting business. I mean, 7 transactions per second is a Visa will transact 10,000 transactions per second. So it's just not in the right scale. The forking and the creation of other cryptocurrencies is happening because you need something that is scalable. You need a different model of being able to agree on whether something is right or wrong. And there are multiple attempts being made at resolving this issue of scalability. The forking is essentially a bonus issue. I mean, if you had a company and it splits into 2, you get 1 of each and you carry on. Which one creates value? It doesn't matter. I think the question that you have to ask is the world ready for something this unregulated and this anonymous? So, the transaction is visible to the whole world. The fact that somebody bought something at a certain price or something has been transacted, that is available and visible to the whole world. What is not available is who bought it. Now, in today's world of know your customer, anti-money laundering, governments trying to figure out which dollar came from where and went where, I'm not sure the world in its current form is ready for that complete anonymity of transactions as to where something is going and where value is being transferred.
Anil, have the emerging markets, India included, priced in the withdrawal of stimulus from two major global banks? Of course, I'm talking about the US Fed and the ECB, because most don't expect the trajectory to change with Jerome Powell being appointed as the new Fed chair.
So, Jay Powell's appointment is essentially it's essentially Yellen in a slightly different form, but it still remains, the policies are unlikely to undergo any dramatic shift. The process of normalization has already been put in place, and I think there might be some minor tinkering which could speed it up or make it slower, but I don't think that is going to change. Also, if you have been listening to what he has said over the past 12 months, his views and Yellen's views have been very, very similar, which means that he's not an outlier. He's basically with the consensus of what the Fed has been doing so far. So I'm not expecting any dramatic shift on Fed policy or direction. But you're right. You're raising a very interesting issue, which is, as of today, the world is awash in liquidity. And out of the four big banks, two have already signaled that they're going to start moderating that liquidity flow. The moderation from the US actually right now is very small, so I don't think it's going to make a big difference immediately, but that is just one out of the four. The ECB is still going to continue to pump money in, although at a slightly slower pace, but they've run out of bonds to buy, so they have a whole different problem. So in that sort of situation, I don't think we will see the impact of that action till the second or third quarter of 2018. I think we're a year away, or almost a year away, from seeing the impact of that. Japan is not, slowing down in any near future, and I don't think China has made it clear how they're going to deal with their own financial issues, because they have plenty of those as well. So no immediate stress.
All right, I think, well, that is all that we have for you, Mr. Ahuja. Thank you very much for joining us and taking some time out in your busy schedule. And with that, it's also a wrap on this edition of Thank God It's Friday. Stay tuned in to Bloomberg Quint.